Hello, everyone, and welcome back to the Scientific Bitcoin Institute podcast. Today, we want to focus on a question that keeps coming up as Bitcoin and the power law become increasingly mainstream. What are the newest developments actually telling us about the network? Are we simply seeing more adoption? Or are we seeing evidence that Bitcoin is entering a fundamentally new phase? When I look at the headlines over the past few years, it feels like we are seeing a constant stream of developments: ETFs, institutional custody, treasury companies, nation state adoption, and increasingly sophisticated financial products. At some point, it becomes reasonable to ask whether these are isolated events or whether they collectively point to something larger happening beneath the surface.
I think that's exactly the right question. If the power law framework is correct, then price alone is not the story. The real story is the evolution of the system itself. One of the core ideas we've emphasized over the years is that Bitcoin should be viewed as a complex system, much like a city, an ecosystem, or even a biological organism. The power law is simply the visible signature of deeper network dynamics. And because of that, when new developments occur, we don't immediately ask whether they're bullish or bearish. Instead, we ask whether they are consistent with the maturation of the network. Increasingly, I think the answer is yes. Many people still analyze Bitcoin as though it were a stock or a speculative asset, but the power law perspective suggests something quite different. It suggests that Bitcoin is a growing network whose behavior emerges from the interactions of millions of participants, and that changes the way we should actually interpret what we're seeing.
One thing I've noticed is that mainstream media still tends to frame Bitcoin almost entirely through price. If Bitcoin rises, it's treated as a success story. If Bitcoin falls, it's supposedly in trouble. But when you look at the system through the lens of complexity science, that seems like an incredibly narrow way to think about what's happening. It feels similar to evaluating the health of an entire country by looking at a single economic statistic while ignoring everything else.
It really is. Imagine trying to understand the growth of a city by looking only at housing prices, for example. You would miss almost everything important. You wouldn't measure infrastructure, transportation networks, economic activity, population growth, or the countless interactions that make a city function. Yet that's essentially what many people do with Bitcoin. Price is one observable. It's important, but it's only one manifestation of a much larger process. What matters is the interaction between adoption, network security, and economic activity. In the physics of Bitcoin, this relationship is described through the value triad: the interaction of the social network, the mining network, and the informational network represented by the blockchain itself. These three components evolve together, and their interactions tell us much more about Bitcoin's long-term trajectory than any single price chart ever could.
So, when we see developments like ETFs, treasury companies, and institutional custody, we are not necessarily viewing them as a price catalyst. We are viewing them as structural changes in the network itself.
Exactly. Most market participants focus on the immediate financial impact. We are much more interested in what these developments reveal about the state of the system. ETFs, institutional custody solutions, treasury companies, and even regulatory frameworks are all signs that increasingly sophisticated layers of infrastructure are being built around Bitcoin. That doesn't guarantee success. It doesn't mean that there won't be setbacks or failures, but it does indicate maturation. And maturation is exactly what we would expect to see in a network that continues to scale. If Bitcoin were truly following the path suggested by the power law, then we'd expect institutions, businesses, and governments to gradually build around it. That's precisely what appears to be happening.
Let's talk about treasury companies because that's one of the biggest stories in Bitcoin right now. Many investors are trying to determine whether these companies represent a temporary trend or something much more significant. On the surface, the debate often focuses on individual firms, their leverage, or whether their capital structures make sense. But I suspect that from a power law perspective, you are looking at something deeper than the success or failure of any specific company.
I think many people are asking the wrong question. The interesting question isn't whether every treasury company succeeds. Some will fail. Some may fail spectacularly. The more important question is why these structures are appearing at all. Why are capital markets reorganizing themselves around Bitcoin? Why are entrepreneurs and institutions increasingly building financial infrastructure whose primary purpose is to interact with Bitcoin? Historically, when a monetary asset becomes sufficiently important, layers of financial infrastructure begin forming around it. And the same thing happened with gold, for example. First comes the asset itself, then come the institutions that facilitate ownership and exchange. Eventually, secondary layers emerge: credit markets, financial instruments, and specialized intermediaries. What we're observing today may simply be the earliest stages of that process occurring around Bitcoin.
So we are less interested in whether a specific company survives and more interested in the fact that an entire ecosystem appears to be forming around the asset.
Exactly. One lesson from complexity science is that people often become distracted by individual components while missing larger system level changes. And physicists tend to focus on the structure of the whole network. The question isn't whether one company survives, the question is whether the overall system becomes more connected, more integrated, and more capable of supporting additional layers of economic activity. If the answer is yes, then the appearance of treasury companies may ultimately be remembered as a sign of network maturation rather than a story about any particular balance sheet.
Here is something I've been wondering about recently. People constantly talk about Bitcoin's monetary network effect, but sometimes it feels that Bitcoin's educational network effect might actually be even more powerful. When someone discovers Bitcoin, they don't just buy an asset, they often begin learning about monetary history, inflation, debt, central banking, and the nature of money itself. Am I crazy for thinking that this educational component may be one of the strongest drivers of adoption?
Not at all. In fact, I think it's one of the most underappreciated aspects of Bitcoin. Most technologies teach people how to use the technology itself. When people adopt social media, they learn how social media works. When people adopt a smartphone, for example, they learn how to use a smartphone. Bitcoin is unusual because adopting it often changes the way people think about the broader economic system. People begin asking questions about inflation, debts, monetary policy, property rights, savings, and time preference. In many cases, Bitcoin functions not only as a technology, but also as a framework for understanding economic reality. That creates a powerful feedback loop. Education leads to adoption, and adoption leads to more education. That education generates further adoption. Unlike many networks, Bitcoin appears capable of spreading both value and ideas simultaneously.
It's almost as though the network isn't merely transmitting economic value, it's transmitting information about the nature of money itself.
Exactly. And ideas can scale. Sometimes they can scale very rapidly. But before continuing our discussion, let's take a quick look at the markets and some of the developments shaping Bitcoin this week. Okay, let's look at the charts. First, let's look at some of these percentages here to understand where we are in the cycle. So, first, we had this 86% crash in 2014. After that, Bitcoin had a dramatic 1500% rise to the upside before our new blow off top. after which we corrected 84% again. A little bit smaller than the last time, but still significant. Then we had another 250% rise to the upside. And after that, we had a 77% crash. Then we had another 84% rise to the upside. And now the question is, how much are we going to correct? Because if we're going to obey the bottom power law support, you would expect this to be a very shallow bear market, actually, because the current power law support is at roughly $58,000. And that would actually put us at a 53% crash or so, which obviously sounds just a little bit too shallow. It's possible. But we know that from previous cycles, we can actually crash quite a bit further. So it could be that we even reach like 50s or 40s or so if this gets pretty dramatic, and we would still be following the power law. We'd just have a little bit of volatility in that dark green region when we look at another chart. This is the chart I'm talking about, and as you can see, we're getting to some very, very juicy levels here. We're almost at the historic bottoms, actually. If you look at some of these other bear market bottoms, this dark green region here really showed where Bitcoin reversed. Sometimes we stay around this region for quite a while, but generally speaking, this dark green region is where the bottoms occur. And we're getting very close to that, as you can see. When looking at the Bitcoin power law fitting chart, you can see that we only have one deviation line left here, which is pretty exciting. This really represents the best value phase you can get in a market cycle. In the previous market cycles, we did typically bottom out at this purple line here. But for example, in 2018, we first reached the magenta line, had a major, like a mini bubble type of ordeal, and then came down to test the purple line. Is this what's going to happen this cycle? I doubt it. I mean, we're kind of already breaking down from this magenta line, but it's obviously possible. But at the same time, Bitcoin is extremely, extremely oversold right now. So any kind of bounce is actually very likely here. We might not reach that purple line just yet, but we're going to have to see. So what's the lowest level we could possibly drop to? To be honest, it's difficult to be picky at these levels already because we're pretty much touching the bottom power law. We just need to drop just a little bit further. In the previous cycles, we have had short-term price action below this line. For example, in this 2015 cycle, we actually dropped quite significantly below it if you look at the percentages, but obviously Bitcoin was more volatile back then. And we also had a wick in 2020. So theoretically, maybe we could reach the 40s, but I don't see Bitcoin dropping below the 40s. And to be honest, even 40s are a bit of a stretch. I think anything below 60K is an absolute steal because realistically, I mean, that would already be slightly below the power law, which is in the high 50s right now. I would load up massively if we go below 60, and anything below 50 is like a deal of a lifetime. Let's also see what Giovanni thinks about this. Here's a great article. You should give it a read. Is the power law going to be broken soon? As you can see, there are already a lot of doomsday predictions by people who think that the power law is going to be broken. And Giovanni goes into detail about how the power law slopes are calculated, what type of price action is normal, what is abnormal. As you can see, as of the writing of this article, we were 5.9% above the power law floor. Currently, we're even below that level. And what really matters is the daily slope and the SNR. So as you can see, he gives some parameters. There's a bull SNR of plus 0.15, neutral 0 to plus 0.15, weak minus 0.02 to 0, and bear below minus 0.02. So today the SNR is at minus 0.46, deep bear. But this is not abnormal. We have actually seen this 200 separate times, as you can see. So we're going to have to see if this is going to play out the same way as in the previous cycles. He also draws a clear distinction between cheap but stressed versus actually being broken. So as you can see, during the FTX crash, we actually went even lower. We scored at 22. Currently, we're at 24 out of 100 as of the writing of this article. So there's nothing out of the ordinary just yet. But obviously, minor deviations, maybe even below the 22 level, can happen. It's just that we will most likely rebound to more reasonable levels relatively soon. And here's a fun piece of news. El Salvador is now the first country to teach Bitcoin to all students 7 years or older. Could you imagine this being taught in like American or European schools? I could never even, imagine this in my head because we never even got financial education at school, which is something actually useful. But obviously, people are taught to be wage slaves instead. And finally, I wanted to show you guys this clip over here. I know a lot of you have already seen it, but since the last podcast was in Italian, I just wanted to show you this clip one more time.
Bitcoin follows the laws of nature. It follows the power law. And scientists and physicists that are studying the correlation and the historical price of Bitcoin are projecting Bitcoin to hit $1 million within 8 years. It's growing not exponentially, it's growing according to power law.
That's amazing. For once, you can see the truth being told in mainstream news.
All right, let's continue the discussion. One concept from the physics of Bitcoin that I've always found fascinating is scale invariance. It's one of those ideas that sounds technical, but it seems incredibly important to the broader thesis. Can you explain why it matters without getting too mathematical?
Certainly. Scale invariance is the idea that similar patterns appear across different scales. A small part of a system resembles the larger whole. We see this throughout nature. River networks display it, earthquakes display it, biological systems display it, cities display it. One of the striking observations in Bitcoin is that many growth patterns exhibit this same kind of self-similarity. The network behaves less like a traditional technology moving through a finite adoption cycle and more like a scale-free system governed by deeper constraints. This matters because it suggests Bitcoin may not fit neatly into the conventional framework that investors use when evaluating technologies. Traditional technologies often follow a fairly predictable pattern: rapid adoption, saturation, and eventual maturity. Bitcoin appears to be operating under a different set of dynamics.
Which is very different from the classic S curve story that people often use when discussing technology adoption.
Exactly. Most technologies eventually saturate. Everyone who wants a fax machine eventually gets one. Everyone who wants a DVD player eventually gets one. The market reaches a certain limit. Bitcoin appears fundamentally different because it isn't merely a product, it's a monetary network. And monetary networks may not be constrained in the same way consumer technologies are. The value of a monetary network depends not only on the number of participants, but also on the complexity of interactions among those participants. That's one reason why the power law behavior is so interesting, actually. It suggests that Bitcoin may belong to a class of systems that scale according to principles very different from those governing ordinary consumer products.
We often mention Jeffrey West and complexity science. Why do we think his work remains so relevant to Bitcoin today?
Because Jeffrey West helped demonstrate something profound. Many complex systems that appear completely unrelated actually obey remarkably similar scaling laws. Cities obey scaling laws, biological organisms obey scaling laws, large social networks obey scaling laws. At first glance, these systems seem completely different, yet when you examine them mathematically, similar relationships emerge again and again. What's fascinating about Bitcoin is that it increasingly appears to belong to that family of systems. Not because we want it to, not because it makes for a compelling narrative, but because that's what the data has consistently suggested over many years.
And that's really the important distinction. We are not starting with a conclusion and then looking for evidence to support it. We are observing patterns and noticing that they resemble phenomena that have already been studied elsewhere in science.
Exactly. And that's how science is supposed to work. You observe the data first, and then you try to understand the mechanisms producing the observations. The goal isn't to force Bitcoin into an existing theory. The goal is to determine whether the theory helps explain the behavior we're already seeing.
Let me finish with a question that I think many listeners are probably asking. What discovery would you most like to see over the next 5 years? What would convince you that we are learning something genuinely new about Bitcoin rather than simply refining ideas we already have?
For me, the most exciting possibility is developing a deeper understanding of why these scaling relationships emerge in the first place. At this point, we already know that the relationships exist. The harder question is understanding the underlying mechanism. Why does adoption evolve the way it does? How do mining, information flow, human behavior, economics, and network effects interact to produce these patterns? That's where I think the next decade of research will focus, not on proving that Bitcoin exhibits power law behavior, but on understanding the fundamental physics of the network itself.
So perhaps the biggest mistake we can make is assuming we already solved the puzzle.
Exactly. The power law was never the destination, it was the clue. The interesting part is the mechanism underneath. And as Bitcoin continues evolving, we may be witnessing one of the most important naturally emerging networks of the digital age. Understanding how and why that network evolves may ultimately prove even more valuable than understanding where the price goes next.
Thanks everyone for listening.
And we'll see you in the next episode of the Scientific Bitcoin Institute podcast.